waking up, fire in the soul, shots on the screen, taking full control. London session calling, the volume is high, watching the candles reaching for the sky.
Strategy locked, no room for doubt. I know what the movement is all about. From the one-step plan to the two-step challenge, finding that edge, keeping the balance, no distractions. Phone or silent mode, deciphering the market, cracking the code. Precision entry, the setup is clean. Living the life inside the machine.
Patterns forming, packets called, balance base draw down, standing strong through it all. Risk defined, profit inside. Seacrest Markets guiding every step into the light. Seacrest Markets leading the way. Making the move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Let's talk execution, let's talk speed. The crystal clarity is what we need. Some is action, just the prices I see it. If you dream of the top, then you gotta be it. Spreads are tight, the conditions are prime. Scaling up the ladder, one trade at a time. Global access, yeah, we worldwide. We're the brokerage back firm, right by your side. It's not a gamble, it's a calculated risk. Reviewing the data, checking the list. Green on the screen, yeah, the feeling is grand. The power of the market in the palm of your hand.
Master of the pulse, heart rate steady. When the window opens, I'm already ready. No revenge trading, no chasing the rat. Following the logic, the plan in my head. The market is a mirror, it shows who you are. Trading like a pro, reaching for a star. Seacrest is the vessel, the compass is true. Breaking every barrier, breaking on through. Discipline and patience, the tools of the trade. This is how a lasting legacy is made.
Chasing the sun from the east to the west. Put the strategy through the ultimate test. Sydney is waking while New York is sleeping. Watching the levels, the promises keeping. Laptop open by the ocean shore. Every pip gained is an open door. No 9 to 5, no shackles, no change. Just the cold hard facts and the capital gains. From the rooftop bars to the quiet floor. Seacrest Markets gives you so much more.
Patterns forming, markets call, balance base draw down, standing strong through it all. Seacrest Markets leading the way. Making the move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Then the lights let the candles glow. Watching the Fibonacci start to show. Resistance turning into support. This is the craft, this is the sport. Back tasting nights and the early mornings. Leading the trends and the volume warnings. It's a chess game played on a digital board. Striking the keys, striking the chord. Elite mentality, top tier tech. Seacrest provides the ultimate check. MT5 or match traders speed. Technology serving the traders need. Daily limit set, max allocation. Building up capital, pure dedication. It's more than the payout, it's more than the gain. It's the freedom we build, breaking the chain.
From the first deposit to the maxed out account, watching the influence and impact mount. With a new era, the elite of the screen, navigating depths where the giants are seen. Seacrest the name, the gold standard inside, turning every vision into brilliant light.
It's a mindset,
Keep grinding,
it's a lifestyle.
keep crushing. We own the vision, we are the flow.
Good morning, everybody, and welcome to Seacrest Markets Live, the final live this week, Friday, 20th of February, 2026. Now, it's going to be an interesting day. In 30 minutes, we've got the cable news coming out around the S&P global manufacturing data, and then later in the day, we've got the core PCE, the GDP, the personal income, and personal spending coming out from the US. So, main focus will be on, obviously, the US GDP growth rates for the QOQ. So I reckon that combined with the potential shutdown again from the US government, which is the DWF, can't remember the initials. Obviously, the ongoing threat with the US and Iran. I noticed on social media this morning that there were multiple planes situated around specific international airports and bases for refueling, which again, not sure if that's completely true. You have to take everything with a pinch of salt that you see this day and age. But overall, going into the weekend, it doesn't look like we want to be long risk going into the weekend for a short-term perspective anyway. I was just trying to find what base those planes were, but I can't find them. Nope. Give me a second. Let me see if I can find them. Well, that was wasted because no, I still can't see it. My feed is updated and I'm not going to quickly search for you because then you and I will get off topic. Now, in terms of overall markets, let me just turn down. So you got a little bit of background noise. Good morning, all. Good morning, everybody. Thank you very much for joining. So, as always, let's break down the markets. Let's cover the fundamentals, the macros, the econs, and everything else in between. And then from there, we'll break down the charts. We'll go into the S&P. We'll discuss everything we possibly can about the markets. I'm going to switch over to the S&P. Now, this chart, is it small, David? The reason it's probably small is because I'm running on a 32-inch monitor. And let me get my display control up. I've noticed that with StreamYard recently, if I'm honest. I'm at 150% zoom, so let me go up to 225 for you. Is that better for you on the chart? I know why my camera glitches. My camera glitches because the refresh rate on my camera is... So I run a Logitech streaming camera. And let me see if I can downgrade the visual effects for you. It's on high definition, 720p, Brio 4K stream edition. Let me see. What's blurry, David? I'm interested to know. What's blurry? Because I'm running my screens are 4K. So I'm always interested to know what you mean by that. It's funny how these systems do it because my screens are 4K, my camera's 4K. I've had to turn my camera down to 480 HP. Only the chart screen are blurry. That's crazy. I genuinely can't understand why the screen's blurry. No, it is. I appreciate that, but it is not okay, in my opinion. The quality of the recording the stream sent to your destinations. You and your guests need a solid internet connection for 1080p for Facebook and X. Unless you have 1080p access, viewers can only watch in 720p. Maybe that's why. Camera resolution, visual effects, enhance. Yeah, I reckon so. I reckon so. I like to try and increase it during the stream, though, because if you guys and girls are all upset, I don't want to be boring. I don't want you lot to be upset with all of that. I'll have a little butch and play around after. If it gets unbearable, just let me know, and I'll see what I can do. I will see what I can do. All right, so I've zoomed into the charts anyway. So just for those of you that are new to the live stream, this specific chart is only designed for these live streams. I keep all of the analysis on there so that we can go over it time and time again. It does get a little bit convoluted. It does get a little bit messy. But the goal here is to be as completely transparent from an educational perspective as we possibly can. I may, on the roll of a month, so at the end of Feb, I may actually wipe the chart so that we can start fresh for March. I'll see what we need to do. I may even just box it off into categories, month 1, month 2. So January's got its own charting box. February's got its own charting box, so that when we go into the tools, we can actually remove, hide, show them again later down the line if we need to. Because what I don't want people to do is say, you didn't call that, your analysis is this, your analysis is that. I want us to be completely on it when we're talking about what's going on in the markets, because the markets are going to show us where we're wrong. They are going to show us where we're right. And it's our job to pretty much, our job as traders is to make money. That's it. That's our only job. Make money. Our job isn't to, be the best analyst in the room. Our job isn't to get in trades that don't conform to our edge and make money. We have to, overall, it doesn't matter whether you're wrong or right as long as you make money, but you need to, it's better to have an edge that loses. It's better to follow your edge and lose money in a trade rather than break your rules and break your edge and break your methodology and make money. I would much rather follow my edge to a T with the system, the discretion, the intuition, and lose money rather than break the rules, break the edge, break the methodology, go against everything that my said strategy or strategies tell me to do, and then go and make money, because then that's a problem. All right, so side distraction, let's get back to it. Now, in terms of the markets, I think we can all quite comfortably say we're in a pretty much a high alert market at the moment, very much a triple threat. We've got geopolitical tensions, we've got hawkish central bank signals, and we've got critical inflation data that has triggered pretty much a broad risk-off sentiment as we head into the weekend. From a kind of a macro and a geopolitical perspective, we've got the ultimatum around Iran crisis. So we have a 15-day ultimatum for Iran, which that is to reach a nuclear deal. Now, what that will also be backed by is additional marine deployments to the Middle East. We saw Brent crude yesterday respond by surging to a 6-month high of $72, which that alone stokes fresh fears of energy-driven inflation, okay? We then have the Warsh confirmation. Again, we continue to discuss Kevin Warsh, the new Fed hawkish tilt. Once he takes the helm, we're potentially looking at rates higher for longer, right? That's the narrative that's being kind of cemented around the world at the moment. But policymakers are expressing deep concern over sticky sector inflation, right? So that's 2 points. Third point is data. Again, this morning, we've got core PCE coming out from the Fed's preferred gauge. We have expectations on the core PCE at 2.8%, which I showed you on the economic calendar on this screen a moment ago. Now, anything higher than 2.8% will likely lock the Fed to pause rate cuts further through the year. Okay. Now, I know we've had discussions around June, pushing back into July, but that actually could be pushed back even further if we get higher, stickier inflation. So that's pretty much the kind of triple threat that we're covering at the moment. Happy Friday. Welcome to the stream. Apologies for the quality. I'll make sure it's better next week. I am not in charge of the tech quality. To me, I can see my screens. It's 32-inch, 4K capacity. Minimum I can probably stream on is 720p, 1080p minimum. But if it's not that good, I'll go and buy another screen and figure it out that way. Maybe it's the quality of the monitor. Haven't got a clue. But it does me well across my 5 monitors. So any questions you've got, David, Riri, any of the other members that are sitting inside this live stream, whether you've watched the live streams before or the recordings from previous live streams, any questions you have, shoot them in the chat, because that way I can respond to them in real time and I can give you honest, direct feedback or an honest response as to whatever that query may be. So that's what we want to do. I want to make sure that you are getting the right resources. You know, I may not be the most exciting on stream, but I'm sure Dan probably one of the most experienced that is actually hosting live streams on a week-by-week basis. There are some incredible people that do one-off live streams. There are some amazing people, very much more experienced than myself doing them as well, but I don't believe they do them as often, which is a shame, because they are a blessing to the industry with their wealth of knowledge and their store of wealth. Now, let's talk indices again, discussing very much an overview about a tech retreat, how the global markets are very much in caution mode. Obviously, indices yesterday, they closed lower. So the Dow, the Nasdaq, the S&P, they closed lower yesterday after that trade deficit, which hit its third highest level on record. Some of the bigger companies like Walmart, it provided its guidance from a conservative perspective for 2026, which it did pretty much weigh on consumer stocks. Now, the Nasdaq, which we haven't actually looked at, you've got the S&P on screen at the moment. Where that remains under pressure is because of the AI. Is SaaS AI priced to perfection? Are we seeing subscription models falter by the knee? And are those valuations now being questioned? You know, I've got some very good friends in the industry, and we've had some good chats about AI, and there's some big comments coming around about how certain companies they just don't believe will be here in the next 12 months. And they're some of the bigger AI-based LLMs. You know, you can go online and go on X, and you can probably find those comments as well. And then if we break out to a bit more of a broader market, because we're sitting in European session, the DAX, the FTSE, now they opened lower this morning. The FTSE 100 alone retreated from its record highs following the jump in oil prices, which would hurt the broader manufacturing sentiment, which, despite having exposure to the energy heavyweights, is seeing obviously the FTSE come off. And then I guess we could probably talk about the Nikkei, maybe the Hang Seng, obviously just because we're trading out of the Asia session for the close of the week. Now, the Nikkei did close up on Friday for them. Managed a 0.5% gain at the momentum, but momentum faded. Now, could that be due to yen volatility? Maybe. Same with the Hang Seng and mainland China. Obviously, it's remaining quiet primarily because of that Lunar New Year break, the year of the fire horse. So it's going to be a good year. Volatile, growth, opportunity. That's what the fire horse is. And it doesn't just mean prosperity, wealth, growth. It does mean volatility. if you cannot tame the fire horse, it's going to be wild. It's going to be an absolutely wild year. Now, that could be bad for markets. Who knows? So, without further ado, let's dive into the charts. Let's talk what's going on in the S&P. Now, our overall target still remains that 7,000 level. We're caught within a range between 6,800 to 7,000. We still want to see that 7,000 level tested in. And as I mentioned, there are a few key areas around 6,960 to 7,000 that could cause challenges. I mean, we have that supply at 69.60, right? We have a descending trend line running through 69.70, cutting above that level and that supply. But the more 7,000 gets tested, the weaker that level becomes. The less sellers that will be sitting up there to defend that level, the more buyers will be realistically trying to buy that level. So I know this chart's messy. It's purely there just to give you overall consigns of what we've been doing. You know, every day we break down these markets to give you as much as we possibly can, from the daily to the 4 hour to the 60 minutes to the 30 minutes, breaking it down all the way into the M15, M5, and maybe M2, M1. But we want to understand what goes on in the higher time frames and the mid time frames. However you want to position yourself on a day trading perspective in the lower time frames, or if you want to position yourself for swings from an educational perspective, we cover it all here. So overall, I'm still looking for longs in towards that 7,000 level. I know it's going to be a little bit more difficult, a little bit stickier with the ongoing geopolitical macro kind of landscape that we're sitting in at the moment. But overall, for me, I'm still positioning myself for highs to go at 7,000. I'm an advocate of those levels. So when we come down into the 60 minute, I've jumped straight down into the 60 minute because I want to show you what we were discussing yesterday. Now, we were discussing, let me just come out a bit. We were discussing how we had this supply level reacted to on the Thursday, 8 o'clock before our live stream. And then coming into the live stream, we traded lower and we had that reaction to this level, which later failed. Now, we discussed a couple of different scenarios. If it broke to the downside, you're going to get some traders that are going to be trying to sell that momentum immediately on that break, which they would have done on the close of that candle. The safer option from an analytical perspective, if you're uncertain if a pattern is going to hold, because patterns, listen, patterns are one of the easiest things to analytically view and trade in the markets, right? But it doesn't necessarily mean they have the best strike rate, the best probabilistic outcome. So you have to overlay multiple confluences with them. And how I would always do it, and how I always kind of overview it, if you go back to the previous live streams, is ideally what we want to see is breakouts, retest, and then from there you ideally either want to see a confirmation that we are going to hold and supply is taking control or resistance is holding. Alternatively, we could look for additional confluences to get short from that retest. Now, what we've got here, break to the downside, we had a small momentum continuation, we've retested that level, and then we've traded down. So more likely, or more than likely, there's going to be shorts inside this leg from US Open to the downside. Now, as you can see, it was short-lived. We traded back into that 6,800 and a quarter supply, demand level, which is big support, extremes of the range, and we've now traded back up. Now, we traded back up towards the back end of the US session. We've gone into Asia and we've very much correctively moved up to the upside before coming into the European and London session today. Now, for that, we'll obviously break down the lower time frames and understand what's gone on during US. But obviously, subsequently, what's happened now is I don't personally think this supply level is anything that we need to concern ourselves with now. I don't think that's going to be something used to take prices lower. It could be, because we've broken the low, we've respected this, and now we're coming in again. But overall, we're cautiously bullish indices, okay? We want to see 7,000 tapped again for the 5th time, because it's already touched 4 times. We want to be long into 7,000 realistically, right? Well, I do. So I'm waiting for better prices. As I mentioned on the live streams, as prices traded lower, realistically, I was looking for momentum to step back in on the longer term portfolio to get involved. So with the way the markets are now, if supply is going to hold, then this is how it's going to look. Okay, so we've got this supply. We've got this supply here. So I'm not looking for shorts. The only reason the market or anyone's going to be looking for shorts from here is if we get further confirmation that supply is in control, we get demand breaking, we then get a further supply respect on a lower time frame, and we could look for continuations to the downside because we are trading inside a supply. There's no way that I'd be looking for longs directly off this level right now anyway. I might have been long from lower down if I was trading Asia, or I may have been long if I'm holding a personal account with a CFD broker or a prop account from yesterday in New York. I didn't trade yesterday, so I'm not in any position on a day trading perspective, whether it be prop or personal. So unfortunately, I cannot show you any trades that I'm in on this particular setup. I can show you the previous trades that we've taken and how we've analyzed them and broke them down. But for me right now, it would be, okay, we're trading into supply. If this supply range wants to hold, then I'd have to wait for further confirmations anyway, because I can't get short off of this. Alternatively, I'm actually realistically waiting for these levels to go so that we can trade higher into that 7,000 level. Now, let's break down where markets are and what happened to them yesterday, because they will be good to potentially recover and recap. I mean, you can see demand's in control here, but we'll discuss that in a minute. Now, we had that breakout yesterday. We had a retest. We continued to the downside, but then that retest was used as liquidity. Now, the reason it was used as liquidity or as a mid-high is because this high was weak. Why was this high weak? Because it failed to break and close below the previous low, okay? So we've traded down, we've come back in, we've swept, we've broke. We've now got this high that was weak, which we've taken, and then we've continued to the downside. So we traded away from this level. You could have looked for a short somewhere inside here if your edge allowed you to do so. Your target realistically would have been something in this demand range. Now, if you were targeting a fixed 1-to-1 RR, then maybe, maybe you would have got that. Yeah, you would have just about. You may have tried to target a 1-to-5, which you would. Would you have got that? One sec. I don't know. With spreads. I mean, you would have hit it based on this RR tool. But again, factor in spreads. Factor in the time of the day. It was coming into 7:45, so 7:45 p.m. GMT. You would have only hit that 1-to-1.5 had you have had a fixed TP and your spreads been tight. Now, obviously at Seacrest Markets, our spreads are extremely competitive. We have two different account types. We have raw spreads with commissions, and we have all in the spreads as well for you, which is a small markup on the spreads. But realistically, during this time and the S&P, that would have been tagged. So you would have been out there for a maximum of 1.15 if you had had a fixed TP. And that's a big if. 75 font, bold, italic, underlined. Had you have obviously been looking for greater 2R with that size stop, by the way, tighter 2R, 3R, 4R, and so on, with that type of stop, you wouldn't have been in. You would have potentially either taken a trailing stop loss, which obviously would have been a small profit, or you would have been taken out for either a break even or a loss, depending on how you manage your actual trades. If you were scalping, then I'm sure if you were scalping, you would have been taking little dips throughout the whole session, a couple of clips off of that trade. Let's just wind this in because you can see we're starting to kind of break. And then obviously coming out through the Asia session into the Asia session, we've had what? We've had breaks of supplies to the left. So all of this to the left has gone. We've broken up. We've come back into respect demand. So there was a long this morning at European Open, so post Frankfurt Open into the session, which obviously is aligning with UK Open. And now we're trading into supply. So a couple of things to consider. If this supply is strong and we are going to hold this supply, and I'm bearing in mind we're in the middle of a range, so I don't think so. If this supply is going to hold this long here at 68 3/4, so 68, 74, 75, that would be deemed your last port of call, because yes, you're trading the front leg. That's okay. You're trading the front leg. That's a confluence. Demand is in control. Momentum is bullish. The negatives are we're trading into supply. We're coming from supply into that demand level. And you're up high, right? From a price perspective, you're trading into supply. And it's rare that you want to be trading when you're in supply or trading into resistance. When you're bigger, when you've got bigger amounts of capital, you do want to be trading into those levels, because if you're front running the market because you need to get your order filled, because you've got to get so much filled without spooking the market, you don't want to do it after the break. You want to preempt the break and force the break. Because if you do it before the level, less liquidity is going to be longing into that level. But when you're doing it after the break, more levels are going to be, like, more buyers and sellers are going to be fighting each other. However, if you've got long from inside here, you have to be holding into that supply level and through that supply level. If you've got a fixed RTP, 1 to 1, 1 to 1.5, so on, then again, subjective on where your stop's going to be placed. You would have realistically got in about there. Your stop would have been about here. You know, you haven't got your 1 to 1 alone yet, so you're holding this trade. That's okay. But again, we're trading into supply. It usually isn't the best idea, but caveat to that and being really balanced, right, is we're expecting, from an analytical perspective, 7,000 to be tested. So we believe the market's going long. So if we believe that, then we're happy to trade into 7,000 and happy to buy the dips. We're happy to buy the dips once momentum switches back into our favor, which it has switched back into our favor. We get in, we hold the position. Now, obviously, we don't want to be shorting from here. We would need to see something like this, right? We would need to see demand fail, supply take control again on the lower time frame. On the lower time frame, we're just looking for that fractal shift, and then we can get involved. Obviously, at the moment, we're just having a pullback. Why are we having a pullback? Why are we reacting? Because we're trading inside of supply. So just on a paper basis, because we're not in this trade, we'll hold this long just because we're going to show you the theories that we're talking about. Stops obviously below the low. Let's target 1 to 1.5 just because that's a better RR for those of you that are trading lesser. It's an easier strike rate. It still gives you a positive alpha if your edge is actually good. So we'll keep that on the screen, see how that pans out. We'll touch upon that on Monday. Again, if this level fails, we'd be obviously looking for supply to take control, demand to fail, and then we'll be looking for short back down into about 6,800. I don't see any reason other than shorting from a supply level that we would be short. My opinion, we would be getting a pullback into demand and then continuing higher. So let's just wait and see how that pans out. Does anyone have any questions on the S&P before I move on to DXY? If any questions come in, I'll answer. Okay, no question. So transferring across into the DXY, you can see yesterday's analysis on our live stream. We were just discussing the different probable scenarios. Now, it's not how I trade. This is purely information from an educational and a somewhat entertaining perspective. This channel isn't designed to provide or give guidance or advice or trade ideas or signals or generate anything for you. It's here just to help you break down the markets, make more informed decisions utilizing your own edge, and hopefully educate yourself better so that you can make more informed educational ideas and decisions to go forward with your own trading. Now, we were discussing it yesterday, obviously, how we were breaking down this move. Obviously, the 4 hours broken up to the upside. How do we identify where we want to go from here? You know, demand is still in control. We had that rounded top coming in. It's coming to respect pretty much to that previous high. I know it isn't exact, as you can see, we've not exactly met it. But actually, when we look to the left even more, we can kind of justify it, right? We had that previous area of supply that failed. That's now become support. We've got the supply obviously failing, so that's now demand. We've got demand range. So we have price reacting to that area, then we've got prices trading up. Now, again, you're not trading the reactions. You're not interested in that level. You're interested in momentum. Trading with momentum, looking and finding value. And maybe yesterday around 11 o'clock going into the lull of London, you would have been looking for longs. You know, maybe you're in from here because demand is in control. We discussed that during yesterday's session. Maybe you'd have got your 1-to-1, yes. Your 1-to-1.5, yes. Maybe your 2, yes. But again, I don't know if you're looking for 2. So I'm not too worried about anything above 1-to-1.5 because I know the majority of you that are trading are going for your 1-to-1s, your 1-to-1.5s. So after that, what happened? We pushed back down and then we failed. So coming into today's session, we failed to take this higher. Now we're trading lower. So at this moment, there's nothing to do, okay? This is the range we're trading in. We could even refine it to this. The reason I say that is this low is now expected to go. Why is this low now expected to go? Because this low here was strong enough to break this high. This low here was not strong enough to break this high. So now we're looking for a change. So we've had the high taken. We're now looking for the low to be taken. If supply is going to take control and the US dollar is going to weaken, which means the euro is going to strengthen, we want to see the DXY trade lower, which means euro is going to trade higher. We then want to see the DXY pull back, and we want it to respect the supply extreme somewhere in this region. We then want it to trade lower. Then from there, ideally, we want to be looking for short. So about 97.80s on a break, retest, continuation, break, retest, and then we can get involved in the momentum, right? That's ideally what you want to be looking for, but factor in the, obviously, overall higher time frame. What are we seeing on the overall higher time frame? Are we seeing a dollar recovery, which means euro shorts, okay? So just bear that in mind at the moment. Obviously, on the DXY, we're bullish, starting to look like we're going to be creating a top and that we're going to start to shift bearish. So at the moment, we're bullish. Longs were in play yesterday. We're obviously trying to see how we pan out. And this is obviously the level I want to see go. If this level holds, then we're ranging. It means both the high and the low is weak. Okay, so let me just draw that retained box on there again. So that's our retained range, okay? I'm just going to delete some of these kids' drawings from my analysis because we don't need these crayons everywhere. But you can see, obviously, the motion in the ocean, pushing up to the upside. High goes, lows respected. High goes, lows respected. Higher lows, higher highs, demand bullish. We're now obviously looking at how price is going to react within this range. Now, this is the 60-minute range. We'll go down into the M30, M15 and see what's going on in the lower time frame momentarily. But for now, we've got this high that swept or fake break that high. This now potentially means this low is weak. So we are going to see two things. One, is this low weak? is supply now taking control? If supply wants to take control after the break, we're going to want to see something in here. It's not perfect. Something in there respected. If price fails to break out from this low of 97.80s, we're in a range. We can trade from the range low to the range high. We can trade from the range high to the range low. But we also have to factor in a third scenario, which is if demand is in control, why is supply holding? Are we just accumulating for price to trade the dollar higher and strengthen, i.e. euro trade lower? Or are we starting to build a distribution because we're trading quite high for prices to trade lower and the US dollar to weaken versus the euro, okay? Give me one moment, please. So let's go down into the M15. Actually, switching the half an hour is only going to show a small move. So okay, so obviously we can see that the supply high is there. We've got equal lows at the moment, nothing broken. So again, nothing's really happening at this moment in time. This low is obviously the low that we're really looking at on the higher medium time frames. Obviously this move here, let's just really kind of clean it up a little bit. So at the moment, obviously we're seeing the M15 is trying to break the low. We can go down to the M5 to see if any intricate price has been taken. Now, we haven't actually done, again, too much. We've traded down the front legs, obviously made a lower high. We've now made a lower low on the front leg, but we've not broken that previous leg to the left. We're still trading inside that at the moment. We're trading at the lows. It doesn't look too healthy. We're getting a reaction at the lows, which is the daily open around that 97.90 level. From here, we obviously want to see that low go. We want to continue seeing that trade down into 97.80, which is about 10 pips below current price. But nothing done on the DXY. And all that means, everybody, you can't trade the DXY, traders and gentlemen. So you have to obviously look at something you can trade. So that would mean we overlay this with the euro dollar. So everything I've just said on the DXY, flip it, invert it, now focus on that for the euro. So what we're looking at right now is how the market is potentially gearing up to continue long, right? So let's go down to the 4 hour. Look at the euro. Look at the price action in the 4 hour today on the euro. Bullish. Started to really shift bullish on this candle. Now, if you can take into consideration overall perspective, we had this bearish continuation. That failed. It's shifted up. We're trading low. So obviously we had this ascending triangle. Or descending triangle, actually. We've broken out of this descending triangle. To me, I think the markets are looking a little bit confusing at the moment. I'd expect us to come back in at this moment. If I'm going to look at, break, retest, continuation theory, I'd be looking at price on the euro pulling back into about 118, which also aligns with the dollar going lower, as per that mention or comment on the minute ago, to coming to that range low. From there, markets have quite an important juncture. Are we going to see euro weaken from 118, trading back down into 117? That just gives you a theory of price, 118 down to 117, which means the dollar will strengthen, okay? That's what we need to look for. If you're trying to trade this PA, personally, I wouldn't, because all you're doing is you're trading a pullback into a level. Obviously, you could justify it because we're trading from this demand area to the left. This demand area is strong. Why? Because it broke previous structure to the left. It has previously been supported, as you can see with the previous high here. We've got that initial reaction here, but this low is weak. Why is this low weak? Because it failed to take out this high. Okay, see what I'm doing? We had this push up, we respected. If price was strong, we would have seen that high go, and then we would have gone like this. We didn't. We got this. Price trades lower, we reacted. We've come into something in here, we've reacted, and now this low's gone. Okay, so now we want to see how price is going to trade overall from this area here. We've got a reaction. Could that reaction be into another level of supply? We've got a supply sitting around 117.90. There's no major kind of key points, but again, you've got your confluences, you've got breakout, retest, continuation, you've got resistance, you've got a supply area. We've got multiple supply areas, to be fair, on the upside. We've got the DXY looking like it's trading back into a demand. So the DXY is trading lower into a demand. The euro dollar is trading up into a supply. When the DXY gets into that demand and euro dollar gets into that supply, we will be looking to see if momentum can continue in its previous direction. So the DXY is going to shift momentum to go long, and the euro dollar is going to shift momentum to go short. Okay, that's what we're looking for. We're looking for the pullbacks to realign with overall higher time frame momentum so that we can get into our desired position. So if the DXY comes into to support demand, we're going to be looking to see how the euro dollar reacts into that resistance level so that we can short the euro. Okay, that's what we'll be looking for, inversely getting long the dollar. So that's pretty much it on the H4. On the M15, obviously this was what we discussed on the Wednesday, the break continuation. We got that continuation to the downside. We traded obviously into that support level, which we're discussing. We had, we had some shitty areas of resistance in here. This resistance obviously respected. This one failed. Why did supply hold if demand was in control? We got that reaction back into the demand. So you could, on the M15, if you wanted to, you could have got long this morning and maybe in and around here because your demand was respected. You're looking for a pullback into that level. It's about 1-to-1, 1 to 1.5 fixed. Obviously, is a little bit more. Obviously, as you can see, there's about 1 to 1.8 in this trade, up to around your negative, around to your positive 25R. Obviously, you've got to factor in that we are trading from supply. Overall supply has been in control, but the theory is we're looking to pull back into an area of supply that's higher up in this leg, so that we can continue looking for momentum shorts to the downside in the euro dollar. So that's the overall perspective. We're looking for a trade back into about 118. And I say about 118. Obviously, I'm not a prick for a tick. It could be 117.82s. It could be 117.90s. The goal is to be targeting your PA with your 1-to-1s, your 1 to 1.5s, and not necessarily call levels. Adapt, evolve, and use your intuition in the markets. If you're going to your 1-to-1s to 1 to 1.5s, you're not worried about it hitting 117.90. You're out of the trade by then. So let's see how that pans out. We'll keep that position on again because, again, I want to see how we come into that level on Monday. On Monday, we could have lost money on this trade. We could have hit target on this trade. But also we could then see how the market's trading away from it. And it's better to put things into play like this so that we can actually go back to them a lot easier rather than going, did I say this? Did I say that? So this way we've got it mapped out onto the charts. We've not really got any further expectations on euro dollar at the moment. If it comes back into here and we start to get that momentum to the downside, then realistically we would obviously be looking for shorts. I don't know. I'm just going to stick that on there like this. We would be looking for shorts in this trade. So let's keep it on there. We'll come back to it on Monday. Maybe some of you will comment on the live stream or the recording of the live stream, be it on X, Facebook, YouTube, Instagram, whatever you're watching on. And maybe you'll let me know how those ideas are panning out. Now, these are just ideas for educational purposes. They're not here to give you signals. This one's obviously already gone, so you can't trade it. If you're a momentum trader, you may try and scalp that. But again, I'm not trying to induce you to take a trade. Okay. Does anyone have any questions on euro dollar or on the DXY before I go to move to gold and then moving into Bitcoin? Any questions you may have, please fire them in the chat. I'll answer them for you accordingly. All right, so no further questions. Let's drop into the metals. We'll look at gold. If you do want me to take a look at silver, which is again correlated, entirely up to you, just drop a comment in the channel. Alternatively, like I said, it trades exactly the same as gold to 90 percentile of the degree, so whatever, it doesn't actually matter. We can cover gold. Inherently, it covers silver for us anyway. So let's quickly move out to 4 hour on gold. Obviously, it's very, looking at gold, regardless of the fact we've got a hawkish Fed, we're still seeing gold climb. Obviously, it was trading overnight at about $5,017 a troy ounce. It's now trading up at $5,033. We've got that's the Trump ultimatum. Okay, so have we seen a revival in gold safe haven status, which is currently offsetting the pressure that we're seeing from rising treasury yields? Okay, so because we're seeing rising treasury yields, it could obviously be the fact that people are looking for the safe haven move into metals such as gold to offset that. Similar with scenario, obviously, with silver. Silver's trading at just under $80. I think it was like $79 overnight when I checked. Just under that, about 4 cents under that, like 78.96 from memory. But it looks like it's attempting to stabilize after that 15% drop. So obviously at the moment with gold, it's still putting in those moves that we always talk about, very much range bound. We've got nothing overall exciting. I'm just giving you them visuals to see what we're looking like. As we drift down into the 60-minute, you can see what we've discussed. We had that previous break to the upside on Wednesday. We've come into that higher time frame supply that we were looking for, which is at the extreme of the move. We had a couple of reactions off of that level, which on the 1 hour could potentially mean on the lower time frames there were some shorts to be had. Alternatively, because you're trading in line with the front leg momentum, you would have been looking for supply to hold. Why supply holding? Why supply being respected if demand's in control? Because we want to see supply pull back into the support or demand areas to get long from. Okay, very simple. What happens? We start to respect supply, we pull back into demand. That's the retest we're looking for. We're obviously then from there looking to see how price is trading away from it. So as we go into lower time frames, we'll break it down. Now, obviously at the moment, gold is still trading in 5,033 and sitting inside that higher time frame area of supply or resistance, whatever you want to deem it as. Slightly different metrics behind the both of those and the technicals. During yesterday's call, we were discussing we're looking for lower prices, maybe a retest of that level, then lower. It didn't come as clean as we thought. We got obviously a move to the downside, a very weird pullback, and then obviously we got a move lower into that demand. Now, it failed to break this low. As you can see, we came into that level. And then we had a very corrective move throughout pretty much the latter part of the US session into Asia this morning. And of course, going into the close of the Friday week, we've got, you know, demand taking control, Asia just continuing to buy gold and send it higher, which really clean move out of the range. So quite messy in that range and a nice clean move to the upside. So let's say we was in US. So let's look at the US session. We've got slightly expansion move to the upside. We had a slight fake break here. So you can see if I just move that along to the middle, we had a reaction. Now, you're trading counter trend in this trade. So if you're only looking for longs, you are not interested in this move at all. So first of all, let's look for the longs, because there's, obviously, let's factor those in because we're long, right? So we've got a long break, demand's taking control. So you're going to be looking for, you could look for a long from in here because it's come back to retest, or you could look for longs from here. So we'll cover both. And we'll cover the short as well, because some people love to trade counter. We've got this. So we'd be looking for a long in here. We would have gone for a small amount of drawdown. Let's say your stop's below here. You got your 1-to-1. You got your 1 to 1.5. And if you're trading a fixed RR, you're out of that trade. Okay? But you're always trading momentum. You're not trading in this bit. You might have got in here, but I'm not going to look at that. You might have got in a little bit lower, but you're trading in with the momentum. The volume's really kicking in. You've got some good volume sitting in and around here, so you know you're going to be buying in with volume. Means you can get in and out nicely. We come into here. We've reacted. You then start to go, okay, I didn't get in this long. That's reacting. This is my last port of call for a long because we're reacting to supply. So I don't know. Maybe you would have got in maybe about here. I'm gonna give us the worst execution. We would have maybe got in about here. There's no 1-to-1 available. If you're trading CFDs, be it personal or prop, you would still potentially be in this trade because of rollover. CFDs you can hold overnight. You can hold over the weekends, depending again. Personal, you can do whatever you want, hold it overnight, hold it through the weekends. With some props, you can't, but most of them you can. You've now got your 1-to-1, so you're trading about your 1-to-1 at the moment. I mean, come on, hallelujah, you know, a big trade there, holding for a long time just to get 1-to-1, I must say. But that's okay. This game isn't about how quickly you make your money, it's about staying in the game. The longer you stay in the game, the more experienced you become. Hopefully, the more money you manage, the more money you make based on AUM versus returns, okay? You can make 2% on 10 million or 2% on 1 million. It's a lot better than making 10% on 10 grand, right? It's a lot easier. In theory, from an AUM versus percentage perspective. Now, you wouldn't have actually taken this short. Now, let me explain why. You had the change of character here, which you had the change of character here. The higher goes, the low goes. We're first of all now looking for resistance to hold, supply to confirm. From there, you'll be looking at this supply. Okay, this is where you'd be looking to get short from. Now, if you think demand is still in control, you are not taking this short. If you think supply is actually going to now take gold lower, then you might get in this short. You might use it as a hedge into your longs. You may be looking for an overall short position to build up your book. You know, you would have got your 1-to-1. You wouldn't have got your 1 to 1.5. That's down here. Price never got down there. So I don't personally think you would have taken that. But again, I'm not you. We're long. We're trading counter if we're short. So we don't want to be trading counter. So that is a subjective play for you. The other method is if you're trading Asia, you're actually waiting for the long, you know, suppliers pulling price back into demand's in control. We then get in another long. So throughout, that's the Asia long. That's a US long / European long because Europe market's still open at that time. And then you've got an Asia long. You would have had a 1-to-1 there and maybe a 1 to 1.5. Yeah. And then you would have had a 1 for 1.5. So the Asia long would have panned out better than your US long because you would have been in quicker, out quicker, nicer trade overall. I think your stop would have been a bit wider actually. So your 1.5 is a little bit higher. And you would have got in, spreads would have been okay about that because this is European Open, trading post Frankfurt and European Open. So 5,040 would have been smashed during very liquid hours, which would have meant your target would have been hit during that previous 15-minute candle. Now, expectations on gold for current price action. We've had that breakout to the upside. I mean, I don't like this as the next point of demand to hold, personally. I think we might come back down into this, which is about 4982. So we can leave that on the level there. Let's wait and see. I would be waiting for price to pull back into this or this. So we've got two levels on here. Let me just do a better one. Again, I'm not interested in what level it reacts to. I'm interested in looking at how momentum and areas confirm after we've reacted to it. I personally, this is strong, this level, because it broke that high. But I do think the safer option is to yield and wait for it to come into 4990s. But obviously to support it, what have we got? We've got the psychological lever of the big round 5,000 number, which is here. So we have 5,000. Okay. So at that 5,000 level there, which I think it's going to be defended. You know, I think that's going to be defended. I think we'll see 5,100 next week. If the continuation of the geopolitical uncertainty, the government shutdown or partial government shutdown continues and the rise in treasury yields continues as well. That's what I see at the moment. If obviously that kind of fear and no more really like big news comes out, then we could start to see supply take control, demand fail, and then we could start looking for shorts from gold next week. Maybe this week, but next week safer because we'll have obviously the weekend gap risk and the weekend risk to factor in. So that's pretty much it for me on gold. Let's quickly switch across to Bitcoin USD. Again, any questions, any comments you may have on gold, please ask them now or forever hold your peace and remain silent. That's interesting. Why March could be a tough month for market. Hashtag shorts. All right, so descending wedges, the patterns are traditionally bullish. What we had yesterday is a bullish breakout in the Asia session, which was actually this morning, not yesterday. Obviously we've traded back into that previous triangle. I mean, it's not the nicest. I hate patterns like this, but they're just visual representations to give you an understanding for those that are newer to the markets. Now we had that break of that 4 hour. Now Bitcoin obviously is looking good at 68,000. I mean, the recovery potentially is showing. If you look here, we've got this. This now looks weak to me because we've respected this. So forecast for next week already, just based on this time frame, is to be trading. Let me do this. Is to be trading above 70,000. Above 70,000. Okay. I know my target's about 72,000, but it's just to give you a cleaner picture above that high. Obviously, if we can break this week high, which is that 71 mark, then that looks good. Obviously, we could potentially come into previous averages. So that's the 4 hour. Let's immediately jump down to the M15 and let's see what went on overnight and in yesterday's PA. So, I mean, Thursday at 9 o'clock, we were trading, 9 and 10, we were trading here. The call was an expectation to continue lower. What happened? We continued lower. I have not adjusted or altered these charts. I know they look pretty perfect, if I'm honest, but the expectation was for us to trade down into that descending trendline support, which also aligns with a previous area of support / demand, which you can see here, which was at that extreme low. Now, following that reaction of the extreme lows that we've discussed, I obviously wasn't here to break down the charts with you in live time. Maybe down the line, if I'm less busy, I'll do live streams throughout the whole day. I'll do US session, I'll do European session. Maybe I'll get other people on to do Asia session, because I'll tell you what, I'm not a robot. I do need to sleep. I spend enough hours in this office on a daily basis on operations for the broker, of course, existing on the prop. I really do this out of love of the game, and of course to provide education, entertainment, and marketing value to our company, our community, and every single one of you watching, because it is truly appreciated and truly honored. Now, 65,000 was obviously tested. We had that level respected overnight, yesterday. Sorry, we've now come out of that. So first port of call would be for me, if I'm looking on an M15, would be I want to see something here go in this previous leg. We've got that. We had that break. We then had this demand respected here. I'm not going to be longing from this. Some of you might be. I'm not going to be. But actually, I might have been. Now, the reason I say that is because I've just remembered we're trading in a range. Trading in a range, I'm happy to trade from the extremes of the lows, and I'm happy to trade from the extreme highs. We've reacted to support. We've reacted to demand. We're coming away from an extreme descending trend line, which is the extreme of the range. So you could start to look for added momentum. If you don't want to, and you're nervous about trading on that first level, we wait for confirmation. There's two ideas here. There's not one. You don't need to be the first in the trade. It doesn't matter. As long as you make money, you can get in anywhere. First, obviously, leg, you're going to be looking for 1R, just about there. Coming into Asia session, right? You've got your 1R. Coming into later in the Asia session, you got your 1.5R. Coming into European Open, maybe 1.5R. Your second trade is from here. You may have got in and about here. I don't know where your stop would be. Let's say here. Big stop on this. Big stop. You get your 1-to-1. You're not going to have a 1-to-1.5, maybe about 1.4. There we go. So there's your 1-to-1. So we'll keep it on that. Actually, let's hit it at 1.5 because we're nearly there. So let's keep it at 1.5. And this isn't us forecasting and saying, oh, we hit 1 to 1.5. This is just keeping it on the chart because visually it's going to be better for you. There's your two trade ideas in Bitcoin from yesterday. We did have some cadence to that extreme. Now, obviously, that was the extreme. So you've got, let me just zoom in, right? We've got that supply level up here, that resistance area. We've come into the extreme ascending trend line resistance. So if I'm long from here and I believe the ascending trend line is going to hold on the range. Now, bearing in mind, this is a bullish pattern. And of course, we forecasted on this session higher prices. I would be taking, if the risk reward was there, I'd be taking about 90% off of this trade because we're trading in a range. I'd leave 10% to run. If the risk to reward isn't there and I'm in this trade and I believe that we're going long, then of course you're just going to continue to hold. So it's a difficult call. But what you want to see is this. If demand is still respecting, but supply is also respecting as well, we really need to see demand break, right? So we've got nothing here. We need to see this go. We need to see this logo, which is here. We then need to see that supply hold. And then we're either getting short inside somewhere in here, or we're waiting for that break here and then waiting for a retest into that level. And then we're going to look for shorts from in here to take us back down into something in here, which we didn't get, okay? We would have been watching the chart pretty aggressively around here because we wanted to see something break, retest, continuation. We didn't get the retest. We just got a failure of that level. So nothing actually matured. So that's how you manage a trade. If you're in those longs, you're waiting for price to actually tell you, get out of the trade. You're not getting out of the trade because you're hitting that level. You're getting out of the trade once the market tells you to get out of that level. And whether you reduce your R that's in profitability, whether you take a break even, it does not matter. You've let the market show its hands. The cards are now in your face. You've got to get out of the trade if it meets your criteria to do so. Otherwise, you're staying long. Now, of course, it's all hindsight, so it doesn't matter. But in theory, you didn't get the confirmation to get short, you're still in longs. Demand is still in control. We reacted to a previous area of supply, which was resistance, now turned support. We got a reaction, we continued to the upside. We then had a ascending triangle pattern here. So you can see we're just bullish continuation. And how we measure the extension on that is we have the flagpole. We then obviously look for the extension to the upside. So targets on this would be about ATR 50 in an ideal world. We're not in an ideal world. The markets aren't efficient. They're anything from efficient. So the EMH theory does not work. In Asia, they're fairly efficient. But if you actually look, you know, as we traded out of Asia into European, boom, expansion to the upside. And then, of course, coming into post-European, pre-London, we had a very range-bound market. Trader stepped in, pushed prices to the upside, and we've had that break. Now what we would wait for is this. Breakout, retest, momentum to kick in, continuation. So maybe we get ATR 50 throughout the day. So we'll touch upon that on Monday's session. Alternatively, as patterns go, we get a fucking mess and we start to trade lower. But hoorah, Bitcoin's trading to the upside, which is good to see. I mean, at the moment, from a Bitcoin perspective, sentiment is currently extreme fear. So fantastic to see these longs because retail are extremely scared at the moment. What does that mean? We get long. So obviously it's trading around that 68,000 level. Obviously we're starting to see digital gold get bid back up. Obviously there's an Iran tension, which is a major concern for the bulls. Is the worst of the news out? Well, maybe. So we can trade. We can trade long because guess what? The worst news is out at the moment. If we don't believe it could get any worse, we trade. We get long. If we believe it's going to get worse, we don't buy risk. We sit out. We sit on our hands. We wait for the market to base. Then we start trading again. But I guess without further ado, everybody, as always, we're over our time on our live stream. It's been an absolutely exceptional time on this live stream today. I've really enjoyed myself today. Obviously, without further ado, if you haven't already, go and register at seacrestmarkets.io. We have dynamic leverage up to 1 to 500 across multiple instruments. Our spreads are extremely competitive, very competitive. We've got a great top of book, great depth, great top of book level. Obviously, it's overseen by none other than myself, obviously here hosting live streams Monday through Friday as well. Here to support you as much as I can and provide you with education, entertainment, analysis, breaking down the markets on a macro and a micro and a technical level Monday through Friday as well. If you're in the live stream or if you're watching the recording, as always, please like and subscribe to our content. Turn on those notifications to be made aware or alerted to any of the content we post, be it the live streams or educational recorded content that should be coming out to your doors soon. And of course, I do value and love the support that you all give me. But without further ado, traders and gentlemen, this is it from me for the Friday. I'll see you all on Monday. Have an exceptional weekend with your friends, your family, your loved ones, and by yourself. But as always, trade safe, trade smart, trade Seacrest, and I'll see you.
Patterns emerging, psychology's key. Discipline strong, no greed in the spree. Risk managed tight, emotions in check. Seacrest Markets lighting the dark.
Seacrest Markets leading the way, making the move every single day. Charts in the vision, mindsets.